let's start off with a look at the euro and what's exactly playing out in the eurozone, with new warnings coming through and Portugal being downgraded to junk status.
Good morning, Alishia. Yes, the sovereign debt issues in Europe are simply not going away, and probably they're not going to go away for the foreseeable future. The euro, as a consequence, weakened as a result of that downgrade from Moody's, and I think it just re-emphasises that a lot of these countries are still going to be struggling to actually make good on some of their debts, and as a result, we could see the euro coming under these periodic bouts of risk aversion, where people prefer to move back into the dollar, the gold, or maybe the Swiss franc as some kind of a safe haven.
With that being the case, we've got all eyes now on the BOE and ECB interest rate decisions tomorrow, and then jobs data out of the US as well, to get a sense of where we're headed. Focusing on the ECB specifically, it seems that the market's fully discounted a 25 basis point rate hike tomorrow. Are you in line with where market consensus seems to lie?
Yes, we expect them to pull the trigger again tomorrow. I think the ECB has made it quite clear that inflation is kind of at the forefront of its mandate, and it has to, maintain that kind of vigilance. That's probably why this euro has been quite resilient in the face of these ongoing sovereign debt issues in Europe, and we expect them to actually pull the trigger, as I say, hike by those 25 basis points. If they don't, I think there could be a little bit of a credibility risk, and of course also if they let inflation get away from them, it's going to be a lot more difficult then to start hiking rates when possibly the effect of all these austerity measures are really biting. Remember, the austerity measures that we are seeing now are only taking root now. They haven't really had a full effect on European economic growth. If we have to start hiking rates further down the line, it could be a little bit difficult for the ECB to impose such punitive measures.
So where we've got this debate raging on necessary to be prudent or dangerous territory that the ECB is stepping on at this stage, you're more in line with the fact that it's necessary to be prudent.
I think so. I think this is your window of opportunity. If you're going to try and stem inflationary pressures, do it now, because when those austerity measures start taking a hold on the economy, and we've seen that starting to have an effect in countries like Greece, if it starts filtering through to the rest of the region, then it's going to be very difficult to hike rates. And then, of course, what happens to your price stability mandate? Yeah. Remembering the ECB is not in the same situation as the Federal Reserve, that looks at unemployment or growth as well as price stability and inflation. So they've got to stick to their guns, and I think in that regard they're probably going to go tomorrow.
While the local unit has been taking much of its direction from global developments, we've got the potential inflow from the Forex deal in the spotlight as well, but we haven't really seen any of those inflows apparently hit the market from previous deals. So would you expect that to be the case in this instance as well?
Look, I think the Forex deal probably is not going to be as bullish for the spot market as one might suspect. Of course, we've got now these counter offers taking place between the two foreign firms, and the price is probably going to keep climbing. But at the end of the day, I feel that at least the Reserve Bank is probably going to absorb a lot of those flows for reserve building purposes. And then we've also got to bear in mind that there's quite a chunky foreign ownership of Forex already. So some of those payouts might actually not reach South African shores. They might go directly to those foreign shareholders. So the inflow into the spot might not be as great as you might superficially expect. Yeah. And as a result, I don't think it's having a material impact on the rand at the moment.
Very quickly, Michael, what would be a currency play for you right now? Because there still seems to be a tug of war between emerging versus developed markets. Are you more in favor of emerging market currencies at this stage?
I think the rand has run a long way already over the past week or so. We're getting down to the bottom of its cycle, the kind of 655, 705, 740 range. And I think we're probably going to start weakening from here, especially if the euro starts to retreat a bit further. And we've also got some domestic factors which aren't playing in the rand's favour, the strike activity for one. And then, of course, we're going to be looking tomorrow for those reserve figures to see if the SARB has been accumulating a few more dollars. So I think the rand has already run quite hard and probably will weaken up to that 780 level.